Good morning. My name is Manju Ganeriwala, and I serve as co-chair along with our esteemed trustee, Tim Ryan, of the FAF Standard Setting Process Oversight Committee. I'd like to welcome our stakeholders joining us for this meeting. Before we move to our meeting agenda, I wanted to remind everyone of our due process correspondence procedures and form, both of which can be found on the FAF website. As previously noted, these measures are meant to make it easier for stakeholders to raise potential concerns about compliance with the due process procedures of the FASB and GASB. In addition, I wanted to direct our listeners to the agenda and meeting materials for this session. You can find these on the FAF website under Meeting and Events Calendar subsection. Now, moving on to today's meeting agenda, the committee will cover the following items: GASB report, report from FASB, report from FASB Liaison to the PCC, PCC meeting observations, and finally, other meeting observation reports. So let's begin our first topic. We'll start with GASB Chair Joel Black, who'll present the GASB report. Joel?
Thanks, Manju, and good morning, everybody. It's great to see everybody on the screen. As always, we really appreciate all of your work in this committee and the oversight that you provide for the due process. I am going to present from the PowerPoint that starts on your materials, page 8. The report looks a lot like it usually does. And so probably if we just go to page 10 of your materials and the highlights, I'll start there. We did approve the technical agenda for the first third of 2024. We added one research activity. I'll discuss that in just a few minutes. Also, during the fourth quarter of 2023, we issued Statement 102 on certain risk disclosures, which I'll also address in just a bit. Finally, our monitoring activities continued. I will highlight two things there. Only one is on your screen. The first one that we do spend a lot of time on is electronic financial reporting. We have talked about that with you, in particular, the implications of the Financial Data Transparency Act, or FDTA. We continue to monitor that. We continue to engage with the SEC and their rulemaking. Not much of an update from them. Work continues, but we don't hear much, but they do continue to listen. We are continuing on, as we talked about last quarter, with a financial statement taxonomy. So we are devoting even more resources to that effort. And that effort, while will be a long effort, is progressing well in its early stages. So we continue to work on that. So with that, I'll go to the next page or two. So the agenda overview on page 12. You can see our projects there. We added one, which was the research activity that I'll talk about on the next slide. And then we subtracted one with the issuance of Statement 102. So we end with the same number of projects at the end of the quarter as we began with. So on page 13, you see the activity that we added to the technical agenda. And that is a research activity that we're calling an other research activity, as contrasted with a pre-agenda research activity, because a pre-agenda research activity has the potential to be a standard setting project at some point. We're just trying to accumulate information for it to determine if we need a project and to give us a start on that project. Here, we're not doing that. This is just information gathering for the board and for others about how many governments utilize GAAP. The name of the project right now is GAAP conformity. I think I put utilization in parentheses there because I think we're going to change the name, because that's really what it is. It's how many governments in the US utilize GASB GAAP as their method of accounting. We haven't done this accumulation in a while, since 2008. And so we're trying to, in this project, develop a model to be able to, one, determine how many governments are using GAAP in the US, but also build a predictive model that we can update more quickly and efficiently, so that every couple of years we can do this effort and see trends of, is it increasing, decreasing, changing much at all, et cetera. So we're going to start this effort with state requirements, which is what drives a lot of local government's utilization of GAAP, and from there, look at some other indicators of utilization of GAAP. For example, participating in the debt market, receiving a large number of grants enough to get a single audit, or participation in a GFOA Certificate of Excellence program are some examples of things that we're going to try to have subsets to help drive our predictive model to determine that number of governments that use GAAP. So we're starting that. We expect to complete that research by the end of this calendar year, and we'll bring the results to you to be able to answer your questions, because you as trustees have asked this question recently. I think it'll inform the board about our environment in which we're setting standards and what's going on with that, as well as the SEC, as they implement and think about FDTA, is really interested in this number, in particular, the subset of governments that are in the debt market that utilize GASB as GAAP and those that don't. And we will be able to segregate that out for them and provide that information to them. So we've added that activity. On the next slide, we get into our different projects. This slide presents our comprehensive projects, which really haven't changed, although we did make progress on them. The following slide, which is slide 15, page 15, is our financial reporting model. This is a project we've had ongoing for a long time, talked about with you a number of times. It is nearing conclusion. During the fourth quarter, the board reviewed a draft of the actual standard setting section language. We looked at a comprehensive illustration that will be included with the standard and gave comments on that. We did our final cost benefit analysis and determined that the benefits of the proposal do outweigh the costs in our view. We also looked at the final standard section, used it, and made a final determination that is Group 1 information under our scope of authority. And then finally, we're taking all that input, the staff's taking the input and edits that we proposed from that, and putting together the final standard with the basis and all that, working on that this quarter. And in fact, next week, we will vote on a pre-ballot draft of that standard for hopeful then a final ballot in our April meeting. And that would hopefully be the issuance of Statement 103. Next slide is our revenue and expense recognition project update and activity. We talked about this last quarter and it continued this quarter. Grant accounting is really one of the most complicated parts of this project. I think we've made really good progress on describing this. I don't think that fundamentally the accounting is going to change, but it's going to be easier for people to understand how to apply our standards to grant accounting, I think, as a result of some of the work that we've been able to do over the past several months. So I'm feeling really good about this really difficult area as this large comprehensive project continues on. Next, I'll move to page 17 and our major projects. Going concern, severe financial stress, continue to make progress on that project. It is on schedule for a preliminary views, which would be our first due process document in the fourth quarter of this year. The infrastructure project, which is a little newer than the going concern project, is moving along pretty quickly. And I think one thing to highlight that we worked on in the fourth quarter here is the application of our relatively new Concept Statement 7. We issued Con 7 in June of 2022. And this was the concept that really elaborated on what an item of info, what kind of criteria or characteristics an item of information should have for the board to require it in the note disclosures to the financial statements. We defined it as being essential, and then we better described essentiality by saying a breadth or depth of users should use it in a meaningful way to impact their decision-making or accountability assessments. And so that's important. It's going to be important on the next slide, but it's also important here because it's us building that concept into our workflow on a project. And we're doing that. And in particular, during the quarter, we did that on infrastructure, where we considered both existing note disclosure requirements for those assets, as well as some potential new note disclosures for those items. And we have worked into our process where the board looks at a list of these items, considers them, do they meet the other parts of the conceptual framework to be an item of information that works in the note disclosures and isn't items that our conceptual framework says are inappropriate for notes. We make those decisions, make a decision about this seems like the kind of disclosure that would be important, but then we pause that, put that list out, and do user outreach. So we go to different types of users through interviews and surveys and ask them about the item of information. Is this something that you would use? And tell us how you would use it. How would it impact your decision making? How would it impact your accountability assessments, so that then that information can come back to the board and the board can make a final determination about each of those items and whether it meets that essentiality criteria that's in Con 7. And so we worked on that list of items for infrastructure, and then in the first quarter, we will be doing that outreach on those items. So both of these projects continue to progress on schedule. Next slide is slide 18 on our practice issue projects, of which there are 9 to 4. The first one is certain risk disclosures. That's 102 on concentrations and constraint risk disclosures. We finished all our due process and issued statement 102 in December. We did find it to meet the group 1 criteria, so it's in our scope of authority. We did do our cost benefit analysis, made the determination that the benefits outweighed the cost in our view, and addressed all our comment letters that we had received. And so that project did result in a standard, and we're excited for that to go out into our stakeholders. Second project I want to talk about there is classification of non-financial assets. During the fourth quarter, this was largely in the comment period. Well, it was all in the comment period. We issued the exposure draft for this standard at the very end of the third quarter, and we had a 90+ day comment period to really give stakeholders the ability to provide input to us. We know they're strapped for resources and time, so we wanted to give them a lot of time to deal with the standard, even though it's not really the biggest standard. It essentially is breaking out the capital asset note disclosures into more detail, into more categories of assets, and not adding a whole new disclosures for those assets, but just more detail to the existing one. And the comment period, we did take it out to January 5th to give people holiday break, and then they come back and give us comments even after the holidays. We did end up getting 27 comment letters on this standard, 7 of which came through the electronic input form. The others were more traditional comment letters. That's probably a normal amount of comments for a project of this size. We usually are in the maybe mid-20s, so 27 is pretty normal. We only got 1 user that gave us feedback on this. And this is where Con 7 comes back, because this project also included that outreach. And so we routinely struggle, as we've talked about with you guys, to get users to comment through the normal due process comment letter kind of channels, although we're trying to improve that. We did a short video on this project. It was the topic of conversation for episode 2 of our podcast. We promoted both of those things through social media, through emails, at conferences. So we were encouraging feedback on this project, and we got 27 comment letters. But I think the fact that we only got 1 user is mitigated because we know we're struggling to get that. That's part of this user outreach, right? We went and did that essentiality determination. We did interviews and surveys of the breakouts that we ended up proposing in the standard for users as part of development of the exposure draft. So we have a lot of input from users already that they would utilize these items of information and they would be beneficial. They talk to us about how they would use it. So we have a lot of that good information to add into the mix of input into this as an exposure draft. So the fact that we only got 1 user comment on the comment letter, while we would always like more input, we think we do have user input through that other mechanism. Subsequent events is our newest project. Deliberation really began in the fourth quarter, so we're just starting that project. And then implementation guide, we have made the determination that we won't update that implementation guide. We did not have enough questions or significant kind of items to address through questions for a 2024 input, but we are beginning the process of looking to see, do we need an update for 2025, for which that process really starts with an exposure draft later in 2024. So we're addressing whether we need that update. Moving on to page 19, these are our research activities. I've already talked about the gap conformity/utilization that was added. That kind of goes along a little bit with the gap structure project that we added, I think, last quarter, where we are looking at the dual authoritativeness of our literature, the fact that we have original pronouncements, each numbered standard, and a codification. Does that continue to make sense for people who are utilizing GAP as they access GAP, understand GAP? How do they do that through the new free GARS, which continues to be very popular, and these different methods of providing authoritative guidance? So the research this quarter really focused on the other standard setters, like our friends at the FASB and like the IASB, who have different models and don't have this dual authoritative guidance, to evaluate the pros and cons, talk to them about how they do things and what they think about it. And then we're going to, we prepared and coordinated and scheduled stakeholder interviews and outreach that we are conducting now in the first quarter to get, how do people that utilize the standards, how do they interact with them? How do they find where the pros and cons of original pronouncements versus a codification? So progress continued on that. Finally, I'll conclude by talking about our post-implementation reviews that are going on. The summary is presented on page 21 of your materials. Most notably, the pension PIR is very close to being done. A draft of that report was provided to the board in very late December. Earlier in January of this quarter, the board provided some feedback to the staff and got a presentation about the process that went through evaluating that report. I think ordinarily in this process, we would probably be presenting that to you guys now in this quarter, but because this is the first report we're issuing under the new PIR, we wanted to give ourselves more time to pull everything together, talk to the FASB, kind of make sure we have a good handle on the process and what this report should include, what it should look like, how it should be presented, et cetera. And so we scheduled with you guys as a committee to present those results to you in the second quarter. So you will be hearing more about the results of the pension PIR next quarter. Our other PIRs did continue. In particular, the OPEB roundtables were held, and the fair value GASB 72 roundtables were being prepared for and are being conducted during the first quarter. So that concludes a summary of our fourth quarter activities, and I would be happy to answer any questions that anyone has. Diane.
Good morning, and thank you for your presentation. I want to circle back and loop together a few things. You started with the financial taxonomy and the research around how many governments use GAP and the outreach and the research that you're going to do on that, perhaps building a model. You touched on their state requirements. Are you planning to gather not only what the state requirements are, but what their journey to that decision was? So perhaps there were some states that considered not requiring GAP and ruled against it, et cetera, et cetera. So I think it would be informative to not just have a yes, no, do they require, do they not require, but also was there a process there and a decision made, and if so, why? Number one. Number two, the users are stretched. And so your user feedback has been strained. I wonder if that's an opportunity for AI or some other method of capturing important stakeholder feedback. And I'll go on mute for your answer.
Thanks, Diane. On your first question, some of those regulations, those requirements are long-standing. I don't think we would go that far back, but I do think because we looked at and accumulated those in our 2008 study of this, I think any changes since maybe then, especially more recent changes, we would want to understand why they made a change, if they made a change. So I think that's probably something we would capture. I don't know that we would go back maybe 30 years to determine why an entity or a state made the decision they made about local governments, and whether or not to require GAAP or for which to require GAAP. On the other one, we'll consider it, right? We'll think about AI as, is there a way to enhance the communication, enhance the way in which we get feedback? I'll take that under advisement and think about whether or not there's something there for us to do. AI specifically is not something that we've talked about as it relates to outreach, I guess, and input from a user benefit perspective, I guess, for now, but
Yeah.
we'll look at that. So thank you.
Maybe it's technically not AI, maybe it's machine learning or something like that, but there might be comments floating around somewhere that capture things. I don't know if it's in press or whatever, that you might not be getting by asking somebody to actually actively engage.
That makes sense. Thank you. I will say we do some of like academic research, and we try to do some of that accumulation in a research activity too, but there might be new tools we can use to better gather that information than our more traditional searches for it. Rick.
Thanks, Joel. And actually, I had a question, not dissimilar from Diane's as far as the topic, but dealing with the gap utilization, and I know between you and Alan and I, and I know John too, we've had some of those discussions about Montana and our journey. And then at some point, even with this group, I'd certainly share our state's discussions that we've had over the years, and its journey, which probably isn't that different from other states too. I know a lot of states just get pressure. They're getting pressure from local governments, and then they put pressure on the legislature, and then the legislature, who really doesn't know what they're doing, and reacts to that pressure. And lo and behold, you have legislation where it allows for non-GAAP statements. But the one question I was going to ask and related to the topic, though, is for those really kind of answered my initial question coming into the day as far as how are you going to get this information of all the different governments and who uses GAAP and who doesn't. You kind of answered that, but those small governments who don't have a bond issue or don't file their financial statements for their certificate of achievement, how do you find those? I mean, because that's where I bet there could very well be many of those in that population where there's some deviations from GAAP. Am I right there? How do you find those?
Yeah, that's going to be the hardest one, Rick. We have talked about that. I don't know that we have a total answer. I think we want to see what the other mechanisms drive for that, right? I'm sure that what we will find is that, like Montana, many states have under a certain threshold population or revenue amount, governments don't have to follow GAAP. They can do something else. So I'm sure we will find that. And then so it's how much do we get out of the single audits or out of the market data or out of the GFOA participants in those states are under that threshold, but we then find they're using GAAP because of these other reasons. And then what falls out from that? Do we have a pretty big population? Do we need to then find some other way to sample and gather that kind of information? I think it's actually another source that I guess I hesitate to talk about, but we're looking at somebody else who might have already accumulated some of this data that we can purchase in a way to find this information. But even that, my understanding is small governments are in that data because it's probably primarily for market participants only if they're in the market. So I'm not sure that's actually going to help get at that rest of that population. And so I think we want to see what it is and then make a determination about how do we, wrangle that one in, but that's going to be the hardest one.
Okay. Yep. Thank you. Manju, do I have time for one more question?
Sure. Go ahead, Rick.
Real quick, Joel, you mentioned and I know I won't say it like you did, but the dual model, between the original pronouncements and the codification. Could you tell what was the rationale for the the dual model, if that's the right terminology, what benefit, I guess, what benefits might someone say that is derived from that kind of a model?
So I don't want to presuppose the research, Rick, but I'll tell you my initial thought. How about that? Which is, number one, it's where we came from, right? Everybody was used to standard 34 and then 35 and then 36. The codification came about because it does become more difficult as standards amend other standards. You want to go to one place to get a topic and be able to see the most current guidance or the accumulated guidance altogether, which is hard with those amendments. And so I think it's just, we wanted to keep the original pronouncements. We wanted the codification, so we added it, and then we've just kept it that way. Others, for example, the FASB have taken, have said that that's not efficient. The original pronouncements maybe are just too unwieldy. And so we're just going to have something like a codification. But, in the process of that, there are things you lose. I would say like a basis for conclusions isn't captured in a codification, but is an important to many people item to be able to read and research, and that is retained in an original pronouncement. So I think those are some benefits to an original pronouncement, but we will see what the research shows.
Are there any other questions? If not, Joel, thank you for your report. I don't have a question, but I just have a comment, similar to Diane and Rick, on your new research project that you've taken on. I'm pretty excited to see the results. We've discussed, that information would be very helpful for folks who implement as we, FDTA evolves and is implemented, but also for your board and for us to understand what's happening. And in response to Rick, I think the Auditor of Public Accounts, at least in Virginia, they review the financial statements of all local governments. So they might be a good source, as Joel and I have discussed before, to start with for each state and then drill down to local levels through GFOA and other organizations. Okay, with that, again, thank you, Joel, for that comprehensive report. Next on the agenda is a report from FASB Chair Rich Jones. Rich, I'll turn it over to you. Thank you.
Great. Thanks, Manju. And good morning, everyone. Manju would like to welcome you officially as the co-chair of the committee. Look forward to continuing to work with you. For the next half an hour or so, Hillary Salo and I will walk you through our activities here at the FASB in the fourth quarter of last year. And suffice it to say, it was a very busy quarter, not because we bunched work up, but because of the way things fell out as a result of our agenda outreach, resetting our agenda, and progress on projects. We'll then turn it over to Sue Cosper, who will do an update on private company activities. But please stop me as we go along. If you look at slide 24, that provides an overview of where we are and the roll forward of our agenda, both in the quarter and for the year. And you'll see that we had significant amounts of due process activity. And when I say due process activity, meaning adding projects to our agenda, issuing exposure drafts, and issuing final standards. During the quarter, we did issue 4 final standards, and those included resolving and completing major projects that had been on our agenda for quite a while, including segment reporting and income tax disclosure project, as well as what I would consider a fairly rapid progress project on accounting and disclosure of crypto assets. So all completed in the fourth quarter. We did also issue an exposure draft during the fourth quarter related to an EITF consensus. And we also added 3 projects to our agenda. And we'll talk about those a little more as we go through the detailed presentation about how scoping those projects and adding those projects benefited not only from the agenda outreach that we did in 2021, but from information that we gathered as a result of having those potential projects on our research agenda and the participation of stakeholders in helping us to properly scope those projects, see a path forward, and actually to build the case for change amongst our board in a willingness to add those projects and tackle those projects. I'm going to move pretty quickly over to Hillary to start talking about the due process for these projects. And I think it's fair to say every project has a story. How it was added to our agenda, the course it took, and the way it ended. And a big part of that story is our stakeholder input. That helps shape it, that helps craft what we do, why we do it, and how it comes out. But also the different stakeholders who are more apt to participate in one project versus another. There's a story there too, and Hillary can give you a little insight into that. And if you have questions about that, ask, because there is no doubt certain projects attract more investor interest because of the outcome of the project. There's others that might be much more detailed, meaning there's variations in what's being done, but it attracts less investor input and may attract more preparer practitioner input because it's problems they encounter in applying an existing standard versus dramatic changes in outcomes. So just think about that as we go, and let me turn over to Hillary, who will do a much better job of going through the detail on this. Hillary?
Sure. So let's dig into all of our due process activities during the fourth quarter. So if we go to slide 26, we did issue a final ASU on our segment reporting project in November of last year. This project has been a top priority from an investor perspective and really responds to their feedback that it's critically important for investors to understand an entity's different business activities through the lens of management so that they can really better evaluate an entity's overall performance and assess potential future cash flows. So we did issue an exposure draft related to this project in the fourth quarter of 2022. And over the course of the project, we have had over 238 total interactions with stakeholders. We also discussed this project with 12 advisory group meetings, and we received 37 comment letters on the actual exposure draft itself. We really received really valuable feedback during the comment letter period. And as Rich kind of mentioned, we had significant interactions with preparers with regards to this project across different industries. And that's really important because preparers were very interested, given that part of this guidance would require that all public entities, including those that only have a single reportable segment, would be subject to the new enhanced segment disclosures. Overall, we heard from stakeholders that they supported the board's decision to leverage that management approach, looking at business activities through the lens of management as the basis for the significant segment expense principle. And really, investors were very supportive and believed that this information would be decision useful from their perspective. So with all of the feedback that we got from our stakeholders, we were able to finalize that guidance, and it does require entities to provide information about a segment's significant expenses, provide certain segment information more frequently, as well as importantly requires that more public entities provide segment disclosures. So including those single reportable segment entities as part of that guidance. If we don't have any questions on segments, I'll move to our crypto asset project on slide 27. So we also issued a final ASU in December on one of our top priorities from stakeholders coming out of our agenda consultation process. And I know we've talked about this project just earlier this year when we issued the exposure draft. Certainly entities that hold plain vanilla crypto assets and investors in those entities had really given us feedback that they didn't believe that the current accounting model really appropriately reflected the economics of those assets and wasn't providing decision useful information to investors. So we did issue that exposure draft in May of this year. And this is a project that we definitely benefited from engagement from stakeholders across all of our different stakeholder groups throughout this project. Since we started the research on this project, we have had over 342 individual touch points. We discussed this project in 20 different advisory group meetings, and we received 83 comment letters from our exposure draft. The cumulative feedback was pretty clear that stakeholders supported the final issuance of this guidance, which does require entities to measure crypto assets at fair value and to provide enhanced disclosures about the types of crypto assets that entities hold, changes in their holdings during the reporting period, as well as if there's any sort of sale restrictions with regards to those assets that are being held. Certainly, this was one where we were really pleased to be able to get such support for finalizing the guidance and overall support across our different stakeholder groups. So certainly, we're very excited to be able to have that final guidance out there to provide that more decision useful and transparent information on crypto assets as well. If we move to slide 28, income tax disclosures. Again, we were very pleased to be able to finalize this guidance by the end of last year. which again, income tax disclosures has been one of those areas that investors have really identified as a top priority coming out of our agenda consultation process. We did receive pretty significant feedback from investors that use financial statements to make capital allocation decisions throughout the course of this project. And I think the feedback that we got from investors in this project really was critical for us being able to refocus the project and provide enhanced disclosures to really help investors better understand how an entity's operations and its related tax risks and tax planning and operational opportunities, really, how does that affect a company's tax rate? And really, how does that affect the prospects for future cash flows for the entity? So we did issue an exposure draft last March related to this, and we did discuss that with the Oversight Committee last May. Certainly, we had engagement from all of our different stakeholder groups. We had discussions, individual discussions, as well as advisory group discussions, and received over 60 different comment letters on our exposure draft. But again, I really do want to applaud engagement from investors as part of this project. They were really instrumental, provided very significant feedback that really helped form the direction of the project and helped us finalize this. The final guidance really does improve the transparency of income taxes because it requires entities to disclose consistent categories and provide greater disaggregation of information that's already in the existing rate reconciliation disclosure, as well as to provide disclosure of income taxes paid disaggregated by jurisdiction, as well as making other improvements to improve the effectiveness of income tax disclosures. So certainly we believe that this is a significant benefit from an investor perspective and really pleased to be able to finalize that guidance by the end of the year. And lastly, with regards to final ASUs that we issued in the fourth quarter, if you move to slide 29, we were also able to issue final guidance in October that incorporated certain SEC disclosure requirements into the codification. So in 2018, the SEC referred certain of its disclosure requirements that overlap with but are incremental to what's required in GAAP today. And they asked us to consider incorporating those into the codification. And if you think about it, codifying certain SEC disclosure requirements, that's not necessarily going to be a significant change from a public entity perspective, but it was really important that we received feedback from non-public entities, as they certainly would be impacted by certain of these disclosures. We discussed these disclosure requirements with all of our different stakeholders, including non-public entities. We discussed it at 8 different advisory group meetings and got specific feedback, especially from the Private Company Council as well. So you can see that in this case, with this project, given the nature of it, more narrow disclosure related type of questions and issues, this was one where we really had significant interactions with practitioners who helped us gave us a lot of great feedback with regards to this project. Overall, we did hear support for this project and folks generally agreed with the proposed guidance. So the board was able to and decided to incorporate 14 of the 27 disclosures that were referred to the SEC as part of this final guidance that really is more narrow modifications of the disclosure or presentation requirements and a variety of different topics across the codification. In addition, since the referred disclosures that came to us from the SEC are still required under the SEC guidance, the board didn't want to be in a position where entities would have to duplicate disclosures. So in this case, the board did decide to require that those changes will be effective when the SEC removes those disclosures from its requirements. So I'll pause there, maybe see if there's any questions on our final ASUs that we've issued in the fourth quarter. And not seeing, Diane, yep.
Sorry, I was going to wait a little bit, so I'm not always the first person to ask a question, but if I don't ask it, I forget it. I really appreciate the level of detail you go through to show the engagement, the distribution, et cetera. In your comment that I think it was the income tax one that you had significant engagement from investors. So I want to acknowledge the positive. I will just bring up one question about, the feedback you get, you don't always obviously adopt. You take it under consideration and you may or may not modify. What is the process for circling back to those that have taken the time to engage, to kind of, hear them out one last time? Or do you just assume they're going to, follow the discussion and come along.
Sure. And Diane, I think it really does depend on the project and the interactions that we've had. But in many cases, we are circling back with folks, right? When the board doesn't necessarily follow the feedback that was received, we will circle back, let them know when we're coming back to talk about that issue with the board, make sure that they're actively involved with that, share a summary of the decisions that were made, and just make sure that they're in the loop with regards to those decisions. So I think from an investor perspective, we're trying to make sure, right, if people are willing to share their time and give us their feedback, right, we want to be able to engage with them as part of that and give them the update when we've been able to complete those deliberations.
Yeah, I'd also emphasize, Diane, we're not one and done with our stakeholders, right? And we need to make it a good experience that we heard them, we listened to them. We may not, at the end of the day, the board may not go in that direction, but we will be back to them on the next project. And it's important they understand how they actually affect standard setting and having that dialogue.
Yeah, one would hope investors are collaborative and understand that they don't always get to their point of view, but one would hope.
Tim, I see your hand is up.
Hillary and Rich, thank you very much. First, maybe just a comment and then a couple of questions, if it's okay. I do want to thank you both and the board overall for the progress on this agenda. When I look at the agenda consultation and the feedback we got, you've delivered on the projects on a timely basis that you committed to, and it ties very much to the investor feedback that we have gotten, that you all got through the consultation process. It's an investor-driven agenda, and thank you for that. But that tees up my question. When I look at some of the other groups, and you've done a great job of laying it out, could you summarize what some of the key themes are that come both from practitioners and then preparers? And let me maybe on the practitioner one, I know one of the things that people are concerned about is talent and availability of talent. Is that a theme that's coming up that we need to think about more broadly on the practitioner side? And then what are the common themes that are coming up through the preparer side as well?
Yeah, Hillary, maybe I'll jump in and then please jump in with me. From the practitioner side, we don't often hear concerns about lack of resources at the public company level. We do hear it more at the private company level because of the role that they play in helping private companies adopt standards. So from a practitioner or the auditor perspective, from the auditors, we tend to hear about, one, do they think it's portraying the economics or not? How does it work with other standards? And auditability, right? We hear those things, and they often have their input on a cost and benefit, right? Is it best portraying the information in the most effective way? From preparers, we get a perspective of, yes, we do hear about costs and benefits and their ideas about economics, but also they share with us what they believe they're hearing from their investors. What's coming up on earnings calls and so on. From the investor side, I would say we pivot to focus on the results of our standard, because it's important that we not speak to people in technical accounting terms if they're more of an investor-focused, outcome-focused user of those financial statements. So what we found has been very beneficial with the investors is focus on the outcomes and what the change is and what are they seeing and what does that mean? And they weigh in on the economics. Is it best portraying the economics? Is it helping them with their forecasts? When Hillary mentioned income taxes earlier, that's a key focus because of the investor shift to looking at the income statement. We had just done a revenue standard, expanded it. This is focusing on income taxes, which I think makes up for in one survey, we looked at about 30% of the net earnings of a company, providing transparency to understand that and be able to make predictions on that on their own. And then we have a project on our agenda on disclosure income statement expenses, which deals with the rest of the income statement. But that really focused on the investors and their outcome approach and showing them examples of what they would receive.
Thank you, Rich. Thank you.
Oh.
Yep.
I don't know if you can see my little hand up there with my background, but I'll echo Diane and Tim's comment in terms of the detail and the breakout of the investor demographics. It's just well as understanding. I actually had a question on the ASU on crypto. If I recall, that was issued fairly late. You had a lot of comments come in on that one. to get to the outcome. And I'm curious, just from a process standpoint, if there's anything we've learned around practices or whatever to get to the conclusions you did as quickly as you did.
Sure. I think with regards to that project, that was one where we were getting similar feedback from both investors and preparers, right? That's pretty unique for our projects to have everybody moving in the same direction, believing that fair value was more representative of the economics of that asset.
Yep.
And so certainly that was one where, while we received quite a bit of feedback, I think that feedback was generally aligned and was aligned with the research that we had done as part of initial deliberations. So I do think that was one where, we had a lot of feedback that came in. We were able to digest that fairly efficiently because it was fairly consistent with the feedback that we had heard and had been considered as part of initial deliberations by the board. But again, I want to say our team did a fantastic job there of being able to pull all of that information together and bring that back to the board in a timely fashion, because it was very important. We did allow early adoption associated with that guidance. So we did have many entities who wanted to be able to apply that guidance as soon as possible.
Yeah, Robin, maybe one thing I'll add to that was when we got the input on the agenda outreach and added that project to our agenda, there were probably 20 different crypto accounting issues we could have addressed.
Yes.
But this was consistently identified as the most important. So I think the discipline of our board of focusing on what was the most important issue to investors that we were hearing from our other stakeholders was the most important issue. And working through that was helpful, because I will tell you, the one thing that can really slow down standard setting is scope creep. And to the extent we had tried to do all things crypto or pursue every issue that, I as a board member might find some issue interesting, so I want to go do some research on that for 6 months. Another one may find something else interesting 6 months. That's the recipe for a long-standing, never completed project. So I do think I would compliment our board, our staff, and our stakeholders for really focusing us on what was most important so that we could complete it in a timely basis.
Thank you.
Right. And appreciate all of the questions. And maybe if I can just round out the discussion related to due process documents issued in the fourth quarter. As Rich mentioned, we did issue an exposure draft on a project that we added to our technical agenda last year related to, and this one is a pretty narrow accounting issue that impacts public and private companies that issue convertible debt instruments and then early settle that convertible debt using terms that might be different than the contractual conversion provisions. So this one is a bit nuanced. It's really trying to figure out in the accounting guidance whether or not that settlement should be accounted for as an induced conversion or an extinguishment. And why does that matter? Well, it matters because if the settlement is accounted for as an extinguishment, you could result in a larger gain or loss than if the settlement is accounted for as an induced conversion. And our current accounting guidance doesn't necessarily reflect the form of convertible debt instruments that are being issued in today's marketplace. A lot of times those are being issued where they can be settled in either cash or shares. And our current guidance doesn't reflect those type of instruments. So questions have come up of whether or not economically similar convertible debt instruments being settled in this manner are being treated differently based on the accounting literature. So this is one that was highlighted to us from a practitioner perspective, certainly one where we've gotten most of our feedback from the practitioner lens here, but being able to utilize the EITF and considering the different feedback that we got from stakeholders, we have been able to work through that issue fairly efficiently. It's currently out for comment right now, so we're looking forward to getting comments back next month related to this exposure draft. And maybe with that, Rich, I'll turn it over to you.
Sure, thanks, Hillary. And if you move to slide 31, there's 3 projects that were added to our technical agenda. And all 3 of these projects came out of our research agenda and as I mentioned earlier, out of the agenda outreach that we had done. The first project we added was accounting for government grants. And this is kind of an interesting one in that we do not have GAAP on point for commercial entities accounting for government grants. And as a result, what you have in practice is a variety of accounting policies being applied In some cases, analogies to international accounting standards, in some cases, analogies to US standards. But what that does mean is you have diverse accounting occurring, and it's not based upon any form of authoritative GAAP, meaning it's not something in our codification. We heard about this issue. We've heard about it for several years, but we heard it very clearly through the invitation to comment. After the invitation to comment on the agenda outreach, we actually issued a invitation to comment to our constituents that took the International Accounting Standard and asked for feedback on it. And we got a lot of great feedback on it, but that worked out well in the sense that it was an existing accounting framework for people to react to say what's good, what could be, what do they think they would prefer a different answer on, and so on. The results of that feedback, we brought it back to our board, and I again would emphasize, is there a path forward to set a standard on a complex issue, and can we appropriately scope it, because that does help us achieve final standard setting on a more timely and efficient basis. I think this is one where we got a lot of great information. The board decided they did want to add this project to the agenda, and we are working through it as we speak. The statement of cash flows is another project that we heard a lot about, possible improvements to the statement of cash flows as part of our agenda outreach. It was on our research agenda. What we've added to is a subset of that overall topic to our agenda. If you think about a financial institution whose business is cash, the statement of cash flows right now is a one-size-fits-all approach, meaning that there's subtotals for operating cash flows, and then investing cash flows, and then financing cash flows. Well, what's the business of a financial institution? It's actually investing and financing very often. But for some reason, we do not view those as operating. And as a result, we have a statement of cash flow that for many in that industry is not used. Doesn't make a lot of sense. So what we're really taking a look at here is what improvements could we make for entities whose business is cash to better portray cash flow information to be useful to investors. So it's something that we've added it to our agenda. We're looking at it, but it's targeted to those industries. The third item on here, and by the way, anytime we mention derivatives, there will probably always be a derivatives project, I would just mention. But this is really the scope of a derivative. What is a derivative? What is not? From the time the board issued its original accounting for derivatives guidance, it's fair to say that some would think there's been scope creep, meaning somehow there's a lot of things that are viewed today as a derivative that you wonder, were those really what was envisioned when the standard was issued to be a derivative? And that matters because the accounting for derivatives is fair value, which is often very different than the accounting that we would have if those items were treated under some other accounting literature. So this is really taking a look at the way the accounting for derivatives is scoped and saying, is it appropriate, or is too much being brought into the scope of that standard, which really should apply other standards simply because of the broad nature of the way, or the broad brush that we've taken to that original scoping. So 3 projects, 3 all as a direct result of our agenda outreach. As I described them, they're also targeted, meaning that we have an idea, we have, I would say, a board agreement on what the issue is, and we're working through board agreement on what the solution is, and that's certainly helpful. Moving on to the next slide, just some other major developments. There were 2 standards that we did complete redeliberations, and the board has directed the staff to issue a final ASU. I think you'll see that final ASU here in the first quarter, Hillary, or soon thereafter. Okay, Diane, I see your hand.
Yes, just going back to that derivatives, I've actually heard investors say cash is a derivative. So I understand the scope creep. And if you want to take this at the end of your comments, I didn't mean to interrupt, my apologies. But what other standard setting bodies would you also collaborate with if you're taking on a project such as far reaching as defining what a derivative is? Are there other, global entities or other entities that you think would be a good collaborator on this?
Yeah, and I would say probably different levels of collaboration. But anytime that we're dealing with a fundamental shift in accounting, I think it's important that we understand, because it is a global economy, are we moving towards maybe a converged answer, meaning similar answers around the world, or different answers? And I think that's an important part of our cost benefit analysis. So we have regular dialogue with the IASB and the IASB staff. In fact, I believe we have a joint meeting. We had one just this past September. We have another one coming up this September for all of our board members, both ours and theirs, to get together and talk about projects that we have, things that we're considering. And I think there's a recognition that to the extent that we can get similar answers, that can be beneficial. And that should be an important part of the cost benefit analysis. We also have regular dialogues with standard setters in Japan, in Korea, in Canada, in Germany, in the UK. And that also helps us because sometimes there's emerging trends and emerging issues that come up in one of those markets quite a bit before they come up in ours. For example, crypto accounting. It's fair to say Japan and Korea had dealt with that a lot more than we had before we started our standard setting project. So it certainly helps inform us and gives information for the board to consider. Just touching on other major developments, the fourth quarter of last year, I also did have the privilege of appearing before the U.S. House Committee on Financial Services Subcommittee on Capital Markets and meeting with many of our elected officials and their staff in advance of that meeting. Once again, it's an opportunity for us to hear from them and hear what they're hearing from their constituents, and the offer to them and the offer to our stakeholders is we have an open door policy. We're happy to talk to anyone who would like to be part of our process. We're always interested to hear what they have to say. And I think that's a message that goes over well with all of our stakeholders. With that, maybe let me turn it back to Hillary to cover the next slide. Hillary?
Sure. So in the next slide, just to give you an update on a few other projects on our technical agenda, and this is probably more of a preview of activities that are going to occur over the next couple of quarters. First, on our project on purchase financial assets. So again, this is a project that did come out of our post-implementation review process related to the credit loss standard. Certainly, we heard from investors and from preparers that the board should reconsider the accounting for financial assets that are acquired in a business combination or an asset acquisition. And I think the main reason for that is that our current accounting model requires that an entity that's purchasing a financial asset that hasn't had any sort of deterioration in credit since it was originated, you're still required to record a credit loss through income the day you purchase the loan, even though that credit discount was already reflected in the fair value that you paid for the loan. So we did receive feedback that this kind of double counting of credit losses is unnecessarily complex. It really reduces comparability, and investors are generally backing it out of their models. So based on that feedback, we did add that project. We issued that exposure draft last year, and we are going to be coming back to start redeliberations on that project actually next week. So we're moving forward from a redeliberation standpoint on that particular project. Also, another very important project of ours related to the disaggregation of income statement expenses. And I know we've spent some time talking about this as a big priority from an investor perspective. We did issue our exposure draft last summer. We've received a total of 79 comment letters. We have been able to digest that feedback from comment letters as well as from the supplemental investor outreach that we completed during the comment letter period. And we were actually able to host a public roundtable in December of this year, where we had an opportunity for stakeholders to come in and let's talk about their feedback that was sent in through the comment letter process. And we did have participants. We had 25 different participants from investors, practitioners, preparers that represented a variety of different industries, and other stakeholders that gave us their feedback with regards to that particular very important exposure draft. I think the feedback really helped us to be able to move forward more quickly with regards to coming back to the board. And we actually started redeliberations at the end of January, and we'll be coming back to the board here for discussions over the first and second quarter as well. And maybe just to round out this slide, we are continuing to make great progress with regards to our accounting for environmental credits project, as well as our disclosure of software costs project, which we expect to come back in the next month or so to the board, and also expect to be able to issue a final or a exposure draft on our interim project by this summer. So just to give you a little bit more on some of the other projects and round out from our agenda perspective. Tim, I do see your hand up.
Thank you, Hillary and Rich, and again, thank you for this detail. One of the things, just reflecting as we go through this level of detail, how are we holding up from a resource standpoint? Like, I know one of the things that you've been focused on is resourcing capacity. When you look at the agenda and specifically the number of things in the technical agenda, and I really do appreciate the preview as to what's coming, but it does beg the question from a resourcing standpoint, how do you and the board and the staff feel?
Tim, I think we're in great shape with regards to a resourcing perspective. We have a great dedicated staff here. Everyone is engaged with the ability to be able to make progress and be able to provide that decision useful information to investors. So I think we're in good shape now, but I certainly appreciate the question being asked. We have a lot of hardworking folks here, so.
Hillary. Marion, do you have a question?
I do, yes. I was just piggybacking on Tim's question regarding resources. Just from looking at the materials that you have provided, there appears to be opportunities for you to engage with the GASB staff on certain items that you guys are looking at pursuing, for instance, accounting for government grants. I don't know, maybe there's an opportunity for that. The disclosure of software costs, that's another potential issue that I think GASB has undertaken within the past few years. So how often does GASB and FASB collaborate when you have items like those that may be similar?
And Marion, I think that's a great question. And I would say it's a free-flowing conversation related to our different agendas. So I actually can look down the hall and see Alan and Joel right down the hallway. So it is a daily conversation when items come up. But certainly we are engaged if there's overlap or areas where we can learn from both of the different standard setting boards. So I think it's a very close engagement between the FASB and the GASB. All right. And then maybe just moving forward, I think I'll turn it over to Rich to maybe talk about our other projects, starting on slide 35.
Yeah, and maybe I'll jump you ahead to slide 36, just an update on the conceptual framework. So in the fourth quarter, we did issue as an exposure draft, our final chapter of the conceptual framework. There's 8 chapters in the conceptual framework. I would note that when we complete that final chapter, we will be done. We will have wrapped up 5 of the conceptual framework chapters in the last 3 years of those 8. And so that's a project that began in 2010. So I know I, for one, am looking forward to completing it so that this important tool is available for our board. Let me turn it back to Hillary just in respect to time to give a quick update on PIR activities and then see if there's any final questions.
Sure, absolutely. And, I think from a post-implementation review perspective, this last quarter, one of the main things we did was we were able to host a roundtable discussion to talk about feedback related to our revenue recognition guidance. So we did have 20 different stakeholders and other observers that were able to come and talk to us about wide-ranging discussion related to the post-implementation review of revenue recognition. So we're talking about the expected costs and benefits of the revised guidance, what issues arose during implementation, what areas were addressed, and are there still areas of guidance that need to be addressed, as well as the overall effectiveness of the standard setting process and the PIR process. This is something that we're going to be coming back to the board for a public meeting a little bit later this spring to talk about and kind of share all of that feedback. And then this is something that we're going to be talking about with the IASB during a joint meeting in June as well this year, as they have a request for information out related to their revenue recognition standard at this point as well. So we're going to have a discussion with the boards in late June with regards to that. And then we'll certainly be coming back in front of the trustees with regards to progress moving towards a final post-implementation review report on this project. And also just with regards with CECL and leasing, we do continue to assist stakeholders by responding to inquiries, proactively seeking feedback from investors during that process. So I would say our PIR process related to those two projects is ongoing and working well. And certainly we're looking forward to getting into redeliberations on our purchase financial asset project, which came out of the CECL PIR process. So maybe Rich.
Yep. With that, Tim, I think just in closing, I want to thank the committee. Thanks for the input and thanks for the guidance and oversight. I do believe we have the right agenda. We're executing on that agenda. We do the right outreach. I'd encourage anyone listening or anyone that the committee's in touch with that would like to be part of any of our outreach efforts. We're thrilled to have them. And finally, I think what you see is delivering on the results of both the boards and the staff's hard work over the last few years. And it's starting to deliver. So do appreciate that. And Tim, back to you.
Rich, just one quick comment on behalf of the committee. I want to thank you all for the listening and building off all the hard work on the agenda consultation. Equally balanced, like when you look at peeking around the corner what's coming, we look at a robust PIR, which we see adjustments coming out as we learn from new standards on the credit. We appreciate it as well. So thank you on behalf of all of us, and we look forward to more dialogue. And with that, we can move now to our PCC update, I think.
Terrific. I think that's me.
Yes.
So good morning, everyone. It's good to see everyone. Our last PCC meeting was held in person on December 13th and 14th. The incoming chair, Jerry Shaver, and new members, David Finkelstein and Brad Hendricks, observed and were able to participate in that meeting. So we were very pleased to have them join us. The PCC report is in your materials beginning on page 41. At the December meeting, the PCC discussed a number of recent decisions made by the FASB, particularly around government grants, the scope and application of profits interest awards, induced conversions of convertible debt instruments, and the accounting for environmental credit programs. There was also a continuing dialogue with the FASB and the PCC on post-implementation review activities, specifically on revenue, and one of our PCC members who observed the PIR revenue recognition roundtable provided some feedback to them so they understood some of the more detailed issues that were discussed, as well as PIR activities on leasing and expected credit losses. The FASB staff and members of the PCC's working group on stock compensation disclosures provided an update to the committee on their research on that particular project. There continues to be very good engagement and dialogue amongst the PCC members and between the PCC and the board. I will comment that we have spent a lot of time in assisting Jerry to transition into his new role, and we have spent time with him in terms of orientation in a number of different meetings. He's also met with every single board member to make sure he has an understanding of their perspectives and views, as well as each and every PCC member. So I'll turn to town halls and liaison meetings and other activities for just a moment. I reported back at the last Oversight Committee, the town hall that we held in October with the RMA, which is the Risk Management Associates, which is a group of lenders to primarily private companies. It was a very successful meeting. The PCC discussed that feedback in December. They also discussed the feedback from the annual liaison meeting that was held with the Auditing Standards Board's Audit Issues Task Force in October, which included FASB as well as the PCC chair. And we looking forward, we have a PCC liaison meeting scheduled in March with the Institute of Management Accountants Small Business Committee. That will be the first time that the PCC has engaged with this group, and a subset of PCC members will be attending that virtual meeting. In December, we held an educational webcast focused on private companies and not-for-profit organizations. Mike Minnis presented on behalf of the PCC, along with Jim Croker and Joyce Joseph of the FASB and, of course, FASB staff. The next PCC meeting will be held virtually on April 18th and 19th. In addition, at the December meeting, always a bittersweet moment, but we also wished our outgoing PCC members, Jeremy Dillard, Mike Minnis, and of course, our outgoing chair, Candy Wright, for their service to the PCC and their commitment to standard setting. So with that, I will pause here for any questions.
No questions, looks like, Sue.
Terrific.
Are you done with the report?
Yes.
Okay, thank you so much for that report, Sue. So our next item is a report from our trustee, Rick Reisig, on his PCC meeting observation from December 14th and 15th. Rick, I'll turn it over to you.
Thanks, Manju. And I would echo what Sue had just mentioned. It was a great meeting. I thought, I always try to give you guys a flavor just from an observer standpoint. And there was great interaction. The one statement I had written on my notes was there was a lot of good conversation rather than any kind of statements being made. It was good exchange of thoughts and ideas. In one particular case, in regards to, I think it was the government grants discussion, I just had a note that it was very candid discussions going both ways, which was great. I mean, that was what everyone wanted. And I think the board got what they needed from the PCC. They were very forthcoming in their comments, and I thought that was excellent. And one other kudos that I'll present here, other than I do want to mention, there's always a lot of interesting presentations by the staff. And FASB does a great job of having a variety of staff present the topic, which is obviously an outstanding learning experience for those folks who work so hard and get a chance to have exchange with the PCC. But they do a fabulous job. I'm always impressed with the staff and the young staff that's there and how it's all intermingled with the topic and how they present and how they respond to the questions, because they're getting questions off the wall from the PCC folks in response to their introduction of the topic, and they're excellent at responding. But one last kudo, and that would be to Rich. In the stock compensation disclosure, as all of us know, in a meeting, you might present the topic and then ask for response, and nobody says anything. and with that particular topic, Rich primed the pump. Which had opened the floodgates. I mean, it was really good because no one was really saying anything. And then Rich jumped in and asked the question of the PCC. And then that kind of opened the floodgates for everybody to feel comfortable and gave them some direction of response. And I suspect Rich did get what he wanted out of the group. So I did want to mention that because that was notable. So that's all I have, Manju.
Sorry. Thank you, Rick. Any questions? If not, our final item is a report on other meeting observations from trustees in the last quarter. And Trustee Brian Lewis observed the GASB meeting on December 14th. And I will turn it over to Brian. There you go, Brian.
Yes. Thank you, Manju. It was an excellent opportunity to see the engagement and robustness of the conversation on many of the topics that are on the current agenda and in process. I will give a lot of credit to the internal staff as well as the board for making sure that everyone's input is heard and valued and discussed and given the proper attention during those meetings. I had an opportunity to participate remotely this time, and I've also participated in person. And I will say, again, the quality of the conversation, even from a remote participation, felt very much just as engaging from an observer point of view as being there in person.
Thank you, Brian, for that report. Any questions for Brian? If not, we have now reached the end of our public session of the FAFS Standard Setting Process Oversight Committee meeting. Again, many thanks to those who tuned in for today's webcast. Please note that the next Oversight Committee public meeting will be held in Washington, D.C. on Tuesday, May 21st. Thank you, everyone.